If you observe the fear and greed index within the crypto market at this moment, its current value stands at 26. Just yesterday, this particular level was recorded at 28, and merely a week ago, it stood at 35. This clearly indicates that if you truly grasp the situation, fear within the market is steadily escalating, and frankly, why wouldn't it? If you go and track Bitcoin, you'll see that it has also broken the 83,000 level. Back in January, you would have seen Bitcoin trading almost above the 97,000 level. Just consider it to be 100,000. A drop from 100,000 to 80,000, that's nearly a 20% fall in just 1 month. This is certainly no laughing matter. People's hard-earned money is invested and they desperately want to know what exactly they should do at this very moment. Today, in this video, we are going to talk about this in detail. If your investment portfolio is currently showing losses, then first and foremost, please don't feel like you're all alone. Because in the year 2022, investors have definitely lost money in the crypto market. If you had made investments, if Bitcoin is falling, altcoins are also dropping and many altcoins have plummeted by up to 80%. If I talk about the last 24 hours, the large candle you see from yesterday, this red candle, $1.68 billion of liquidation has occurred. The market is already in extreme fear, but today we are going to decode the reasons why the market is falling and how you can make money in this market by following a professional strategic setup. So first, let's delve into the real truth to understand this ongoing crash, this market that has been continuously falling since October. What exactly is the reason behind this? What you are understanding and what is being told, that's not the only thing at play here. It's not just one reason. There are multiple factors at play. First, you need to understand that the American Federal Reserve has maintained interest rates at 3.5 to 3.75%. The Fed Chair, Jerome Powell, has made it very clear that there will be no more rate cuts in 2026.
Industrial gold today, the Federal Open Market Committee decided to leave the policy rate unchanged.
This now implies that liquidity will remain quite low. Secondly, Donald Trump's talk of imposing 100% tariffs is a significant threat. The ongoing US-Iran tensions mean that investors are pulling out of risky assets. Now, many people believe that this recent price decline, especially for Bitcoin, is due to retailers panicking. It's not just retailers panicking. What basically happens, trading is done on leverage. For example, if you trade above the band, you might take 20x leverage here. I have 1,000 rupees but I'm trading with 10,000. I have 1 lakh rupees but I'm trading with 10,000. Profits will be calculated in the thousands. But what happens if the market moves against your position? Your losses will also be substantial. And that's precisely why when leverage positions are liquidated, a massive domino effect is triggered. And currently, this very domino effect is still playing out. According to various sources, what you are witnessing right now, this significant drop in Bitcoin's value. Bitcoin's market cap is dropping by $300 billion in just one day. Meanwhile, I was checking the internet. There's a very popular Reddit thread discussing what to do if your portfolio falls by 50, 60, or even 80%. Experienced traders there have given 3 options. Let's understand each of these options one by one. Option number 1 is to hodl, meaning you hold and patiently wait for the bull run. If you've held Bitcoin or perhaps Ethereum or any other blue chip crypto, then patience is absolutely essential. The experts are clearly stating that you will have to give it at least 3 years' time. Otherwise, you are simply gambling because true investing only happens when you commit for more than 3 years. The second option is to double down, which means averaging. Look, if you trust the project's fundamentals, then you can average down at a lower price if you want. What this does is bring your average cost down, but if you're doubling down on shitcoins, your investment is just getting worse. Now the third option is to just cut your losses. If you invested in a project and it's no longer viable, its investment thesis has changed, then exiting, taking out the remaining money and investing it in a strong project would be a better investment choice for you. Why should you hold on to the investment when you feel that the very logic with which you invested has changed? Another thing comes up here. If you invested yourself and incurred a loss on your own investment, can you follow experienced traders? Now it's about your decision making. The market is in a bear run. You need to observe. The market there is falling. So, duro pesyo, what do people do when they get emotional in a bear market? They buy at the high and sell at the low. You either need to understand technical analysis, or if you can't, dedicate 24 hours to the market yourself, even after understanding technical analysis. So what you can do is you can engage in copy trading directly on the Binance platform itself. Now, why should one do copy trading and what exactly is it? Look, I will explain the complete system to you step by step and also tell you about all the significant benefits involved here. You're getting the opportunity to copy professional traders, and that too completely free of charge. Traders who possess extensive experience and who consistently utilize automated stop losses. What you can see right here, top traders, they've made 330,000 in just 30 days and approximately 240,000. What is the current ROI? And then there's emotion-free trading. So what will happen now? These traders will trade. They will enter positions themselves and exit on their own. While copy trading, you are following the expert system, and the most important thing here is risk management. In fact, if you copy someone, you can even set your own stop loss. Let's say if this trader makes a wrong move, you will also know the exact amount of loss at which you need to exit. Then there is complete transparency. You can clearly see which trader is profitable, what their ROI is, and what their maximum drawdown is. Now make sure to follow this max drawdown tip. You should always select those traders whose maximum drawdown or MDD is quite low. For instance, here it's 5%, there it's 3%, and over here it's 12%. So the one with a lower percentage is definitely better. If someone's MDD is 18%, it implies they're taking a significant drawdown. You should avoid those traders experiencing drawdowns of 25% or more. However, you're able to copy these particular individuals for free. In fact, when you go to copy these, you can also copy them in a mock, that is as a demo. Look, I'll provide you with the Binance link in the description and the pinned comment. You can go and open an account on Binance. And once you open an account there, you will also receive a welcome bonus. Now let's take a moment to discuss the technical setup. So if you observe Bitcoin, you will notice that it's currently trading below its 50-day and 100-day exponential moving average, and it's quite a bit lower than that. So the trend is quite clear. A bearish trend is currently in play for the time being. Now regarding this current setup, immediate support is forming right here at 80,600. If it breaks below 80,600, how far down can it go? Let's also understand that if it does break 80,600, the next support level comes directly into play at 74 to 75,000. So from here, you could see it sliding down to 75,000. In fact, it might even reach the 71,000 levels. Now, if it breaks through that and then bounces back from this point, that would be a completely different situation. But there's one interesting thing to note here. Now, what's interesting, you need to understand this, that within Bitcoin, there is a 4-year cycle. And this is quite a twist for you, that currently it appears bearish to us. And additionally, we are seeing that it might slide further down. But what you need to understand is that the 4-year cycle, we've historically seen it repeat. What happens here? First, there's the halving event, where mining rewards decrease. Then, 17 months post-halving, a market top forms. And for 12 months, the market enters a bear run. If this cycle repeats, then you might observe Bitcoin this year for the next 12 months, potentially remaining in a bearish momentum. This is quite important, and it's crucial for you to grasp this point. But as I mentioned earlier, there's also a significant twist here. What exactly is that twist? What's happening this time is that institutional demand from ETFs is exceptionally strong. So now, the market doesn't just have retailers. Big institutions are bringing movement into Bitcoin. And when ETF demand comes for Bitcoin, we also see a big momentum within Bitcoin. Now, big banks like Morgan Stanley, Wells Fargo, these prominent names, they are now saying that you should also keep Bitcoin in your portfolio. Even major experts say Bitcoin should be up to 4% of your portfolio. So, what will happen in that scenario? There will be buying pressure in ETFs. And if there's buying in ETFs, then it's not necessarily true that Bitcoin will just keep on falling. This is also quite a twist. So there's a technical setup and there are fundamentals as well. But in a bear market, we don't just need to survive. We actually need to make money here. So I'm going to tell you 5 such rules that you can implement right now. And it's crucial to understand them in detail first and foremost. You can certainly do dollar cost averaging. If there's a really good coin, for example, Bitcoin or Ethereum, then you should invest in it regularly, within small, consistent intervals. Binance offers an auto-invest feature, which the editor will display for you on the screen. Through this auto-invest feature, you'll be dollar cost averaging every single month, which essentially means you're performing an SAP. So, this auto-invest is essentially an SIP, allowing you to invest in good crypto projects and benefit from dollar cost averaging. Now, first, you've set up SIPs in solid projects. Second, keep your portfolio somewhat diversified. And diversification doesn't just mean investing in many different cryptocurrencies. You should also keep your money in assets like gold, stable coins, and in fact, even bonds. Don't make a very large allocation in crypto. The third thing here, Your coins have the potential to generate for you a yield, which is essentially a regular income. But what's important is to avoid high leverage. In a bear market, there's a lot of volatility and excessive leverage can completely wipe out all your money. And then you should focus on projects that have strong fundamentals like Bitcoin, Ethereum, and Solana. Because when the market recovers, these will be the first to recover. But if you've put your money into shitcoins or even these meme coins, there's a high chance they might not recover at all. So instead of blindly trusting Telegram groups just because someone told you to, it's crucial to diversify your investments a bit. And make sure to follow the 5 important points that I've explained to you right here. So in conclusion, you must understand what's happening right now. Money is being taken from impatient people's pockets and put into patient people's pockets. What should your action plan be? First of all, if you've invested money in meme coins, in shit coins, then review your portfolio once, seriously. Now consider this. For assets whose fundamentals are no longer viable, it's best to exit and recover your remaining capital. Then consistently apply dollar cost averaging or rupee cost averaging strategies to quality assets. If you're finding trading to be too challenging, then you can simply go to Binance and make use of their copy trading feature and explore the profiles of top performing traders. In fact, if you go and type my name here, Pushkar Raj Thakur, you can choose to follow me as well. Here you will be able to see my total performance, everything that's currently going on, my profit and loss statement, all my active positions, and also all the positions that I took in the past. All of this would be visible to you. The second thing you'll notice here is, what's the ROI within 90 days? It's a 32% return on investment. What have I actually made? Honestly, I've only taken very small positions here and I've made around $900. In fact, I also have my private group here. You may also choose to join this one right here. You can also take a look at its performance. And if you're interested in joining the private group, then I am providing a special code in the description, which you will have to use. Otherwise, you won't be able to follow me on this platform. So you can go and explore copy trading, which will help save your time. Even if you're sleeping, this is an automated system operating here. So I have an algo that runs here. It takes automated trades and it's performing quite well. Currently, the performance is looking good. So if you'd like, you can go ahead and follow me here. And the link that I'm providing you in the description and comments, when you open an account through that specific link, you will now also receive welcome rewards. We had made a special request to Binance for this, that those who are opening a new account should definitely get some welcome bonuses or rewards. So now if you go and open a new account, you also get welcome bonuses and rewards. In fact, whenever new coins are listed, you also get airdrops from Binance, meaning free crypto. So now you can go and open an account on Binance, finally. In addition to this, we have a 5-day workshop. If you wish to learn automation within crypto, not crypto trading itself, automation means whatever strategy you have, you want its algorithm to be built.